Guys, I'm really happy to welcome to the podcast a new guest. It's Dr. Kirk Elliott, PhD. And he started in the wealth management industry, about 30 years ago. He's got over 18,000 clients all over the world. He has 2 PhDs, one in finance and public policy and administration, another in theology. And the website is Kirk Elliott PhD. That's 2 L's, 2 T's, kirkelliottphd.com/Dinesh. Dr. Elliott, welcome to the podcast. Let's talk a little bit about how to think about investments in this crazy environment. It seemed that investing was a kind of easy task in which you put some money in real estate, you put some money in the stock market. If you were a little older, you put some money in bonds. And then you pretty much sort of forgot about it and just went about your daily life, and you kind of benefited from the upward trend in the market. Are we in a different situation? And if so, why?
We are. Those were the days, right? Those were amazing days. And I would describe that as like the Trump years and the Reagan years, which had very similar economic policies. Lowering taxes, lowering interest rates, and job creation. When you have that, people spend money. When people spend money, profits, revenues, earnings go up and stocks go up. But what we've got now under the current administration is 180 degrees opposite. We've got rising taxes, rising interest rates to slow down inflation that they're creating by printing money out of thin air to fund every stimulus under the sun. And instead of job creation, we have wage reduction. So therefore, what worked in the past doesn't work in the present. And every investment that we have is either going to grow or shrink because of policies coming out of DC. So that's what we have to look at. Now, the biggest thing that I think is facing America today, which is going to impact your investments, is debt, right? So to put this into perspective, Dinesh, if from 1776, when we became a country, until 1980, when Ronald Reagan became president, so that's 204 years, debt went from zero to just under $1 trillion. Our national debt was like 900 and something billion in 1980. Okay, so 204 years to go to 900 and something billion. Now, last month alone, in the last 30 days, our national debt went up $600 billion. I mean, it's like, what? In 30 days. See, they're spending like drunken sailors. So if you multiply that out times 12 for a whole year, we're on pace to add $7.2 trillion to our national debt over the next 12 months. So this, if you look at it biblically, if you didn't have any debt, who cares if interest rates are 15 to 20%? It wouldn't bother you because you don't have any debt. However, America's in debt up to its eyeballs at the federal level, state level, municipal level, individual level. So now these rising interest rates that they have to keep raising to slow down inflation is the Achilles heel of our economy. And people aren't going to have the money to spend like they used to. So investments that worked in the past don't necessarily work right now, Dinesh.
Wow. I mean, I think for the ordinary American, debt is a little abstract, at least the national debt. And I think it's because those numbers are so big, it's very difficult to get your head around them. But whether or not you consider the debt as a whole, isn't it a simple fact that we have to pay interest on that debt every single year? That's a real dollar amount. And you can't get around that. And that's going to keep eating into the available resources that the government has. And then I think I also hear you saying that this is going to reduce corporate profitability because people are going to cut back on spending. And so what is a sensible person who's looking to the future to do in this environment?
Well, sensible right now, again, take everything into consideration, right? Where we are right now. The only way to maximize your future is to maximize each and every day. I would allocate into tangible assets right now. So you want to stay away from bonds when interest rates are rising because it doesn't make sense. Interest rates, when rates go up, the value of bonds comes down. When rates come down, value of bonds goes up. Bonds were amazing for the last 40 years. Not until they started having interest rate hikes. Now they started to be disastrous. So tangible assets like gold, silver, oil, things that are things always go up with inflation. So we're hearing rhetoric right now out of Jerome Powell at the Fed, Janet Yellen at the Treasury saying, we're going to pause interest rates, meaning they want us to think they've won the war on inflation. They don't have to keep raising rates. No, not so fast. If they won the war on inflation, they could lower interest rates again. They're not. Probably have one more rate hike increase of another quarter of a point, and then they're going to pause them at these high rates. That will handcuff anybody that carries debt. And that tells us one thing: by their own actions, they haven't won the war on inflation. They're pausing rates at a high level. See, this is going to be death to the U.S. economy. Now, add to that really quickly what happened in August 22nd through 24th. The BRICS nations met in Durban, South Africa. Putin, on day one of that, said, we're going to de-dollarize the world. It's our objective and it's irreversible. What did he mean? By January 1st of this year, they added 6 of the 9 largest oil producers in the world into the BRICS nations. So and they're going to trade in their own currencies. That means there is no petrodollar anymore come January 1st. 70% of the world is no longer using the dollar. The demand for the dollar is done, which means they're going to have to print their way out of it. It's going to add more inflation. Tangible assets go up with inflation. Right now, this time in history, not always, but right now, I would look at gold and silver, quite honestly, because it makes the most sense. Where during the Trump years, during the Reagan years, stocks, bonds, mutual funds made the most sense because the policies of growth were there. They're not right now.
Guys, if you need some guidance with your investments, this is the man to talk to. It's Kirk Elliott, PhD. The website is Kirk Elliott, 2 L's, 2 T's, KirkElliottPhD.com. By the way, you can follow him on X. It's at Kirk Elliott, PhD. Dr. Elliott, great to have you as a guest, and would love to have you back sometime.
Sounds good. Thank you so much for having me.
Last month, the G20 announced that it welcomed discussion of the effects of implementing central bank digital currencies in their countries. Now, these digital currencies could allow the government to track every purchase you make. They could even allow officials to prohibit you from purchasing certain products or easily freeze or seize part or all of your money. In essence, they give the government full control over your finances. Now, concerned Americans like me are diversifying our assets into physical gold with the help of Birch Gold Group. If you want a physical asset held in a tax-sheltered retirement account, you should call Birch Gold. Debbie and I, customers, we buy our gold through Birch Gold. But find out for yourself. Text Dinesh to 989898. They'll send you a free information kit on gold. Here's the easiest way to become a Birch Gold customer. If you have an IRA or a 401k from a previous employer, Birch Gold can help you convert it into an IRA in gold. You don't pay a penny out of pocket. Text Dinesh to 989898. Claim your free information kit on gold and call them, because if digital currency becomes a reality, it'll be nice to have some gold to fall back on.